Welcome to the Section 179 Deduction Teaching Tax Flow mini lesson. We talk about the 3 laws of teaching tax flow, and one of them is that tax agencies are your involuntary business partner. So one of the laws to encourage investment here in the United States in equipment, in machinery, is the advent of the Section 179 deduction, which allows business owners or corporations to immediately deduct such expenditures. So let's dive into some of the nuts and bolts of this. While we jump into Section 179 deduction, we're going to look at the rules under IRS Publication 946. We get asked a lot of questions about what property is eligible and when is an asset, quote unquote, placed into service. We're going to look at some of the Section 179 deduction limits. We're going to actually dive in and we're going to show you a sample form 4562 that shows you where to deduct Section 179 on your tax return. We're going to jump back in IRS Publication 946 for some guidance specifically for corporations and partnerships. And then we're going to talk about the Section 179 deduction for cars and trucks. That being said, there's a separate car and truck mini lesson that we encourage you to take, and it's part of this Teaching Tax Flow Entrepreneur course. Finally, we're going to talk about state tax considerations. Now, per IRS Publication 946, you have to have eligible property. Right here on the left-hand side is really walking through what is eligible property. Eligible property, there's quite a large array of property that could be eligible. I'm going to let you take a look at that and then placed into service. You place the property into service when it's ready and available for specific use, whether a business activity or income-producing asset. So just because you place money onto a vehicle, and let's say you're buying a vehicle, although we have a separate mini lesson for vehicles, or a piece of equipment, the piece of equipment or vehicle has to be placed into service, meaning the business has to be using it, or rental property, for instance, needs to be available for use. Just buying something that is not being used doesn't place an asset into service. I also talked about that Section 179 deduction limitations. Unlike bonus depreciation, Section 179 cannot create a business loss. That doesn't mean that you shouldn't utilize it, because those deductions will carry forward into a future year. So just be aware, Section 179 does not create a business loss. It does carry forward. All right? Let's take a look at some of the limitations. For 2022, you can deduct over $1 million of eligible property immediately. And for 2023, almost $1.2 million. All right. Now, I did mention that it's limited to your business's net income. We have a specific mini lesson just for automobiles and trucks. And those type of assets that are over 6,000 pounds are eligible for the Section 179 deduction. Understand that larger businesses can get phased out of the Section 179 deduction if they have more than $2.7 million and almost $2.9 million worth of qualifying property. So this Section 179 deduction is really built for those small business owners. I mentioned we're going to take a look at this 4562. Please check out right here where my cursor is. This is where you deduct your Section 179 equipment. You can see that this taxpayer has eligible business income, which is reported on line 11, so the entire deduction is allowed in the current year. Now, for partnerships and partners, Section 179 deduction limits apply to both partners and partnerships. This is where you might want to pause and take some notes, because obviously a partner or a member of an LLC can be involved in several different businesses, so those limitations on assets placed into service are critical to understand. A K1 from partnership or a multi-member LLC will really lay out a lot of the information you need to determine if that Section 179 deduction is allowed in the current year. S-Corps are very similar, but understand that there's a limit on business income. So if an S-Corp acquires a significant amount of Section 179 assets and places it into service, that deduction might carry forward. Corporations as well, we have another mini lesson just on C corporations as well as S corps. So on C corporations, if you have Section 179 deduction that creates a loss, that will just carry forward as well. So those are the main differences. All right, calls to action. If you've acquired new or eligible assets, determine if the Section 179 deduction gives you the most beneficial result. There's always that option of essentially taking bonus depreciation or Section 179 deduction. Remember that the Section 179 deduction is not an automatic, it's an election. So bonus depreciation is automatic and you have to elect out of it. With Section 179, it's not just automatic. If you want it, you can elect into it. Beware of those depreciation recapture bill rules in the business income limitation. So remember, if you fully deduct an asset and then years later you sell it, you could have recapture. We talked a little bit about the interplay between bonus depreciation and Section 179. It really gives you some flexibility to determine how much deduction you want in a specific asset. So you might elect out of bonus depreciation and elect into Section 179. Make sure you take a look at our car and truck mini lesson for specific 179 rules for vehicles, and look at your tax return to make sure that you don't have a Section 179 depreciation carryover. A lot of times when you have a change of tax professionals, those carry forwards are missed. Or if you're doing tax planning and projections, make sure that entity might have deductions from a previous year that are carried forward to the next year that you could utilize. And always take a look at the states you operate in, because not all states honor the Section 179 deduction. All right, thanks again for watching this mini lesson and have an awesome day.
John here from Teaching Tax Flow. I wanted to thank you for watching this video. We literally have hundreds of hours of content between podcasts, webinars, videos just like this built specifically for you, the taxpayer. Whether you're a full-time employee, you're a freelancer, you're a contractor in some other sense, or you're thinking about getting into business for yourself, everything here at Teaching Tax Flow is perfect for you, basically going off of the roadmap provided by the IRS to legally and ethically reduce the taxes paid over your lifetime. So be sure to subscribe to this channel and connect with Teaching Tax Flow, and we will see everybody very soon.